Welcome to Bloomberg Business Week. I'm Carol Masser.
And I'm Jason Kelly. We're here inside Bloomberg headquarters in New York City.
This week, the coronavirus continues to spread, and investors try to size up government efforts to contain the outbreak and its economic impact.
Plus, Barnes & Noble, the next chapter, as it were, the new hero of the chain's rags to riches tale. It's, wait for it, a hedge fund.
And then remembering Jack Welch, the legendary GE CEO, is remembered by his biographer, our former executive editor.
But we begin with a surprising Super Tuesday. Former Vice President Joe Biden reopened a path to the Democratic presidential nomination.
That's right, Jason. If you go beyond the headline, and it still will not be easy for Joe Biden. That's a story in the magazine this week by Josh Green, Business Week national correspondent, joining us right now from D.C. And Josh, what a week. Super Tuesday, a bit of a surprise, and then we had several candidates dropping out.
Quite a week. Everything turned upside down. I think the real story is that non-Sanders moderate voters finally, at the very last minute, coalesced around a candidate. That was Joe Biden. I think that makes him the front runner. But as I write in Business Week this week, he now faces a new and familiar problem that a lot of Democratic strategists are worried about. And that is that he's back in the role Hillary Clinton was 4 years ago, where you have an establishment favorite, you have Bernie Sanders as an insurgent, and it's hard to see how Democrats manage to unify the party.
Some clear, huge moments just on the eve of it with Buttigieg and Klobuchar dropping out. Was that the difference, or was this sort of hiding in plain sight all along Biden's strength?
No, I don't think it was. Look, I think there were two big factors here. One, as you say, was the consolidation of the other moderate candidates behind Joe Biden. That was a signal to voters, both their own followers and undecided voters who weren't Democratic socialists, that this is the guy to line up behind. The other big factor, we saw this in South Carolina, and we saw it on Super Tuesday across the southern states, was that African-American voters, especially older ones, have always had a deep, strong affinity for Joe Biden, and that paid off big time on Super Tuesday and allowed him to sweep those states and storm into a delegate lead with, months to go before the convention.
So what about young people? That was really a critical component that helped Barack Obama get to the White House. Joe Biden still lacking in young voters?
Yeah, what was fascinating about Biden's Super Tuesday constituency, the groups that he put together, he really reassembled Barack Obama's coalition. White working class professionals, African-American voters, suburban voters, a lot of working class folks. The one exception, though, is Obama was always very strong with young voters. And on Super Tuesday, those young voters were mostly with Bernie Sanders. So this is one of the reasons that Democratic officials that I talked to and strategists, even though there was palpable relief that the party is now unified behind one candidate, the party establishment is unified behind one candidate in Biden, they recognize he's still weak with this all-important group. Hillary Clinton never really managed to win over Bernie Sanders' supporters, even after he endorsed her 4 years ago. Democrats worry that the same thing could happen with Biden, that if he doesn't manage to unify the party, convince Sanders supporters to get behind him and actively work to elect him, that Biden might meet the same fate that Hillary Clinton did 4 years ago, and that is to lose to Donald Trump.
Let's look ahead to these next contests here, Josh, because there's still a lot of delegates out there and some pretty important states just over the next couple weeks.
We now have effectively a two-man race. And as you look ahead, it looks to me like the states we have coming up tend to favor Joe Biden. The one I'm going to be looking at is Michigan. Michigan was the scene of a surprise upset 4 years ago when Bernie Sanders came in, beat Hillary Clinton, caused a lot of excitement and belief among Sanders folks that maybe they actually could knock her off. That didn't end up happening. Since Super Tuesday, the polls that I've seen from Michigan show Biden ahead. So we're really rerunning a test case that we saw 4 years ago. If it turns out that Biden wins in Michigan, especially if he wins big, I think that might be the last blow for Bernie Sanders. But of course, in a campaign with as many twists and turns as we've seen, not just in the last year, in the last 72 hours, you can never say it's finished.
Josh Green in Washington, thank you so much. A crazy week and a lot more to come, several more months of the election. All right, well, Super Tuesday's results and the coronavirus definitely dominate conversations this week about financial markets as well as the economy.
U.S. Congress agreeing to an emergency spending bill, billions of dollars for virus after the Fed jumped in with an emergency 0.5 percentage point rate cut to calm investors and ease financial market conditions. At least that was the idea.
Right. It was a volatile week, to say the least. Let's bring in markets editor Mike Regan and economics editor Peter Coy to make sense of it all. Let's start with that rate cut. Peter, it reminded me, all the way back to the financial crisis. We haven't had an emergency rate cut by the Fed since then.
Right. The Fed attempted to calm the markets. The problem is that the Fed can do only so much when you have something like this. It's not primarily a financial market issue. It's an issue with real bodies and real viruses, and it affects the real economy. So production, it affects the supply side of the economy, not just the demand side of the economy. When it's the demand side, you can sort of goose up people's spending by making money cheaper. But when it's supply side, when goods aren't being produced because people can't get to work, that's something that monetary policy is not as good at solving.
Right.
And so is that why the market just sort of wasn't buying it, Mike?
Well, I think the one thing you have to realize when you look at a week like this in markets is that once you introduce that sort of volatility into the market, when you have that steep of a drop over such a short time, it tends to create both up and downward volatility. In other words, a big move down one day and then a big move back up the next day and then back down. And the example I've been using a lot is the 2011 episode when the U.S. lost its AAA credit rating. You saw these massive 3-4% moves up one day, back down the next day, back up. And it goes to, let's talk about how computerized the equity market has become and how traders in those sort of algorithmic programs are really reacting to signals in the market. And they're very good at pattern recognition. They know when you see a big drop like this that there's bound to be a bounce. It's not going to last. So it all sort of creates this situation where a lot of money's on one side of the boat one day, the other side of the boat the next day, and back and forth. And I think that given all the other news flow sort of causing, it to go one way or the other, that issue, though, really explains the suddenness and the massiveness of the back and forth movement.
Wow. Great context, as always, from both of you. Thank you so much. Mike Regan and economics editor Peter Coy. And that brings us to our cover, Larry Kudlow.
That's right. He's, of course, Trump's top economic advisor. He says we're not going to panic over the economy.
Business Week editor Joel Weber here with us. Safe to say, after the week we had, you had to put Kudlow on the cover.
Yeah, we're just, trying to keep an eye on the markets. And we've had such a weird little pass here where last week was so all over the place. This week, still, is it up, is it down? And, there's a person who's sort of the perfect person to talk to in a moment like this, which is Larry Kudlow, one of the top economic advisors to President Trump.
Well, and it's amazing the timing that Sean Donnan had sort of strolling into the office just as everything is happening, within blocks of where Larry Kudlow is sitting. And you get this portrait of a man who's very much in the center of things, but kind of in his own way.
Yeah, that's right. It's almost like a talk of the town with Larry Kudlow.
Yeah.
And in the backdrop, the Fed stuff is happening, and markets are trying to interpret what that means. And here is, this interaction with Larry Kudlow in the midst of it all, who's a guy who's ultimately maybe the biggest optimist in the world. And that's really what he's known for, is being a cheerleader of capitalism in the markets.
Well, and what's great is, and what's interesting about this story is he's got the ear of the president when it comes to economic policy. And as an optimist, you do wonder whether that optimism will lead him to the wrong policy.
Welcome back to Bloomberg Business Week. I'm Jason Kelly.
And I'm Carol Masser. Join us for Bloomberg Business Week every day on the radio starting at 2 p.m. Wall Street time. You can also catch up on our daily show by listening to our podcast.
And you can find us online at businessweek.com, on our mobile app, and you can watch us daily on YouTube.
Well, back to our cover story. Despite financial market conditions, President Trump's chief economic voice remains extremely optimistic just about everything.
And for more on his thinking, here's our conversation with Sean Donnan. He covers trade and all things globalization for Bloomberg, and he caught up with Larry Kudlow at the White House. His timing was perfect.
By 10:30, a little shortly afterwards, I'm sitting down with Larry in his office, and that's just as Jay Powell is getting ready to step up and do his press conference. And what you really get from that moment is a sense of how this White House is trying to ride out this storm. And, Larry Kudlow is this relentlessly optimistic figure. He is, we all know him from CNBC, from his TV shows. We all know him from the way he trots out at the White House pretty much daily to try and talk up the economy, talk up markets.
Where does he get kind of the information to kind of help make his decisions or guide the president to make economic decisions?
So Kudlow has a staff. He's at the head of the National Economic Council, which has a staff of policy wonks, and they certainly give him advice. He's also talking to people in the markets and in business a lot, and he's spending a lot of time with the president. One of the things Larry Kudlow has been very good at doing is figuring out where the president is on the economy and where he might be going off the rails potentially on the economy and trying to talk him away from that. But he spends a lot of time with the president. And so when you're hearing that optimism and that view that he's trying to project, it's a lot what President Trump wants him to project as well. And that gets into, this is an existential moment for this administration right now. They are running on the back of what has been a pretty robust economy that is facing the first real crisis on the economic side of his presidency.
What's his track record, on catching economic cycles, and will his optimism potentially make, a misguided step when it comes to guiding U.S. policy, economic policy?
Look, and that is absolutely the fundamental question here is whether Larry Kudlow's optimism is actually going to cloud his judgment in some way. We are at a key moment. You got to get the calls right here. And Larry in the past hasn't gotten all the calls right. Back in December 2007, he was poo-pooing any talk of a recession. We know now that is exactly when the recession that turned into the Great Recession as a result of the global financial crisis was getting underway. He acknowledges that, but he has this relentless optimism. Part of it is political messaging. There's no doubt that the president wants to be in a place where he's talking up the economy, not talking down the economy. But you can't escape the fact that this week, the Federal Reserve, for the first time since 2008, went with an emergency rate cut. This was not a scheduled meeting that they were moving at. This was a response to a crisis that they saw in the economy. And the White House was refusing to embrace the idea of a fiscal plan at the same time. And Larry's saying all through this, even as this is happening, literally in that hour that this is happening with the Federal Reserve, that he thinks everything's fine in the U.S. economy.
Staying in the economic section, it is one of Europe's most enduring economic problems.
And it's a big question. Why can't Spain shake off one of the world's highest unemployment rates? Here's this week's Business Week Explainer.
Crunch these numbers. Germany's most recent GDP report showed the economy was growing at a rate of just 0.5% per year. Spain's economy was rising at a 1.8% rate. But Germany's unemployment rate is 3.2%. In Spain, it's a whopping 13.8%. In the OECD, only Greece's jobless rate is higher. Blame it in part on a quirk in the Spanish labor system. It's easier and cheaper to fire a worker on a temporary contract. Around 90% of the jobs created in recent years have been temporary. And of those jobs, about a fourth of them last for less than a week. Spain has other problems, the EU's highest rate of high school dropouts and among the highest portion of low-skilled workers. Spain also has one of the lowest rates of mobility. That means Spaniards often stay in cities with few job opportunities. Unless those problems get fixed, some economists say, Spain is unlikely to lower the jobless rate below 12% in the coming years.
Up next, activists in full force, especially at one very active shop, Elliott Management. It's involved with two well-known companies, Twitter and Barnes & Noble.
Plus this week, the passing of one of the best-known CEOs of all time. We're talking about Jack Welch. We talk with someone who knew him not just as the head of GE.
This is Bloomberg Business Week. Welcome back to Bloomberg Business Week. I'm Jason Kelly.
And I'm Carol Masser. You can also listen to Bloomberg Business Week on the radio on SiriusXM Channel 119 and on AM 1130 in New York, 106.1 in Boston, 99.1 FM in Washington, D.C.
AM 960 in the Bay Area and London on DAB Digital and through the Bloomberg Business app.
And don't forget, you can watch us daily on YouTube. Just visit youtube.com, search Bloomberg Global News. The stock market's more than 10% correction and initial bounce back. Well, it had some market watchers saying it was time to buy the dip.
Tempting, and yet that may not be a wise move. A very smart story in the finance section this week. We talked with one of the reporters, Suzanne Woolley.
In the midst of such volatility is not a great time to rethink your asset allocation. It's really hard at a time like now to sort of sit on your hands and stick with like a well-thought asset allocation that you have, or if your 401k is well spread out between stocks and bonds. Being impulsive now, it can be dangerous. And buying on the dip sounds good because we've had 11 years of a bull market, and a lot of people have cash on the sidelines. They've kind of been waiting to jump in. So is now the time? And we have no clarity, you know? I mean, there's just no visibility into much. So buying the dip now seems a little more like market timing. And as we all know, you know.
Bad idea.
Bad idea. Fool's errand is what they always, call it, because partially when you get out, that's one decision, okay? The harder decision often is to get back in.
Right.
And a lot of people who sort of got out in the last downturn didn't get back in soon enough.
Do you kind of pull back a little bit and just say, I'm good with this,
Yeah.
And then do you wait for when...
And take some money off the table, you
Correct,
mean?
right. And or be a little bit more conservative and wait for valuations to come back down. Because I think I hear what you say from the financial crisis, but people saw their investments, cut in half because of the financial crisis.
True.
So you have to kind of balance that out, right?
Yes, definitely. I mean, it all depends on your time horizon,
Yeah.
right? And if you have, how much cash you have saved. Because if you're planning to retire in a couple of years and you really haven't put enough away, you don't want to be having to sell stocks into a downturn.
Right.
So in that situation, you may want to pull back a bit, and maybe in your 401k, there are stable value funds that, are reasonable.
Right.
Not anything like equity long-term returns, but safer.
Right. Well, and that leads to, I think, one of the most important points of your story, which is it is a good time and a very real time to understand your appetite for risk.
Totally.
Tell us about that.
Well, we don't really know our appetite for risk until we're in it. And after 11 years of a bull market, there are a lot of people, especially younger investors, who don't know what it feels like to see such a swift decline, and sort of most of us actually think we have more risk tolerance than we do.
Yeah.
We overestimate it. So now is a good time to sit back and think how did that make me feel?
Yeah.
Did it make me feel panicky? Could I not sleep? Was I worried? Okay, so maybe you want to adjust your portfolio a little bit right now, tweak it so that you can sleep better.
A very active year for activists. They are out in full force in 2020, especially over at Elliott Management.
Yeah, they've been very busy. They are involved in two well-known companies. One of them made news this week. The other, it's a feature story in the magazine.
Tracking it all is our own Scott DeVoe of Bloomberg.
Well, Elliott's taken a stake, obviously, and we broke this story on Friday night, essentially, that they've taken a stake, nominated 4 directors, and now want to push Jack Dorsey out of the CEO role.
Okay. So
Wow.
Yeah.
I mean, that's a big headline and certainly stopped a lot of people in their tracks. What's the case?
Well, the case is pretty simple, and I think it's something that's been made a few times, is that Jack he's one of the only people in the world to run 2 gigantic publicly traded companies.
Right.
He runs Square. He also runs Twitter. And, earlier this year, late last year, he said that he also wanted to spend up to 6 months a year working in Africa. And so I think the argument is clear in that, he has a lot of things going on. Obviously, he has some divided loyalties between the 2 companies, and that Twitter is something that needs a full-time CEO. Particularly now we're going to major events like the U.S. election, Summer Olympics. We've got the coronavirus going on. And while those are really great for, tweet activity, what they do also is create Twitter users and advertisers.
So what does Elliott want? I mean, they've amassed, about $1 billion position in shares of Twitter.
It's a little bit more than...
A bit more?
Yeah, than $1 billion, yeah.
So what do they want specifically? Do they want Dorsey out? No doubt about it?
Yeah, I mean, that's the simplicity of this argument is that... And that's why I think it resonated with so many people around it, is that it's a singular argument.
Right.
You need a CEO that will run this company. And while they think that the shares have underperformed, relative to Facebook and what have you, they do peg a lot of that on the fact that Dorsey is divided loyalty, but also there was a Rolling Stone magazine article, I know last year sometime, where he said that he was getting 8.5 hours sleep a night. So running to, one $35 billion company, one $25 billion company, and getting more sleep than I do in a night.
All right. So meanwhile, down in Union Square, not far from where we are, kind of ground zero to some extent of what's going on with Barnes & Noble, also involving Elliott Management. Goodness gracious.
They've been busy.
Yeah, so you'll recall last year, Elliott, through its private equity arm, acquired Barnes & Noble. And, they didn't do a whole bunch of change in the lead up to the holidays because they didn't want to mess with sales at all. But now that we're in the new year, are starting to implement all these changes into the Barnes & Noble chains. So that's what we're hooking this story on that's in Business Week this week.
Let's talk about Barnes & Noble, though, the individual who's responsible for kind of where this goes.
Yeah.
James Daunt, who I'd never heard of. Have you heard of him? Big guy, though, in terms of book sales and book selling in the UK.
A legend, almost, you could say. So he had his own book chain for quite a long time, and he's a very particular person. He has a very strong beliefs on how books should be sold. And when Waterstones was bought a few years ago, not by Elliott but the previous owner, they decided to bring Daunt in, and Daunt went around, and the first thing he did was take away the all black uniforms that everybody was wearing, and he started to empower the franchisees, the people that own the stores, to start catering the books towards more of their audience. So
with the UK chain, you're talking about.
with the UK chain. And so after a certain amount of time, they actually achieved some success with this. Elliott ended up buying Waterstones, and actually is turning a profit from this Waterstones for the first time in I don't know how long, a decade.
Decades.
Yeah. So the point being is that you can make a chain seem indie or neighborhoody, if you do these certain things. And that's very much what they have in mind for Barnes & Nobles. And so they brought James Daunt in to run both Waterstones and Barnes & Noble.
Up next, the real Jack Welch.
The legendary GE CEO is remembered by his biographer and our former editor of the magazine, John Byrne.
This is Bloomberg Business Week.
Welcome back to Bloomberg Business Week. I'm Carol Masser.
And I'm Jason Kelly. Still ahead, we talk streaming and Hollywood with the creator behind Showtime's hit series starring Jim Carrey. It's called Kidding.
Plus, from Coldplay to Massive Attack music tours, they're trying to go green.
And a food takeover in the Pursuit section, including a roadmap to opening a restaurant. It ain't easy.
It is not at all. We begin, though, with General Electric. News this week from the company and of the passing of its former iconic CEO, Jack Welch. Let's start with the company news. GE saying it will see a first quarter blow due to the coronavirus.
And that outbreak poses a new risk to CEO Larry Culp's attempt to pull GE from one of the worst slumps in its 128-year history. Culp spoke with Bloomberg Television's David Weston earlier this week and remains, amid all of that, quite optimistic.
We have 18,000 people in China. All of our major businesses have significant manufacturing footprints there. With the exception of a handful of facilities that we have in Wuhan, we're open for business. Now, that doesn't mean we are at full capacity at this point, but as people are coming back to work, we are ramping, and I think on average our facilities are at 75 to 80%, depending on the day.
All right, for more on how this complicates the turnaround for General Electric, Kaylee Lines joining us now with a chart. They're in a tough spot right now.
They are. And really, when it comes to GE, all you really need to look at is free cash flow. That is the metric we all pay attention to because really for many years, GE's cash flow profile was pretty strong. But we all know they ran into some problems a few years ago, not least of which billions and billions of dollars in liabilities, an ailing power business. And that meant for 3 years in a row, cash flow was actually negative, as you can see here on this chart. But we did did see an uptick in 2019, many thanks to CEO Larry Culp's turnaround efforts. He's offloading assets to pay down debt, really trying to streamline the business, and that meant positive cash flow did return. But as you alluded to, Carol, there is a risk here from the coronavirus. Could see up to a $500 million hit to cash flow in the first quarter. They did stand by their full year forecast, though, which is interesting.
It's a reminder, too, that these black swan events, I mean, they hit certain companies even harder, especially companies that are in, as GE, as sort of a fragile turnaround state.
Right. They weren't in the best place to begin with, and this definitely throws a wrench in this turnaround that Larry Culp is trying to execute.
Right, just starting their turnaround. All right, Kaylee Lyons, thank you so much. Great chart, as always. Now, when we think about GE, it's hard not to think about the much talked about former chairman and CEO of General Electric, Jack Welch, who passed away 1 week ago at the age of 84.
Someone who knew him well beyond the headlines that most of us were familiar with. That's John Byrne. He wrote, with Jack Welch, the autobiography entitled Jack, Straight from the Gut, massive bestseller, and an intimate look, and he got an intimate look at the man. Here's our conversation.
He came to me and asked if I would help him write his memoir. Of course, there was no hesitation. I agreed. To me, that experience was like having a PhD in management or leadership. I did, in fact, spend well over 1,000 hours face-to-face, one-on-one with Jack. It was the most grueling experience of my life. We fought a lot over what should be included, what shouldn't be included. He was very demanding. We went through many, many, many drafts.
John, as you read and hear everything that's been written and talked about since Jack's death, what do you make of it? What do you make of his legacy? Because it's fair to say, from a business perspective, it's a complicated one, given what has happened to GE specifically, and even some of his lieutenants who went on to other jobs. Some very successfully, some maybe not so much, and some questions raised there. What do you make of it as someone who, we should point out, a little brag for us, you wrote more Business Week cover stories than any person in history, so you know a thing or two about business. What do you make of his business legacy?
Here's the truth of it is that, look, anyone who lives a meaningful life, anyone who makes a very big difference in this world, is going to have some flaws or imperfections that the media is going to jump all over. So, you can read, there was one piece in the New Yorker, for example, that basically said the reason why there is a Bernie Sanders is because of Jack Welch. Or there's a columnist in the Washington Post who wrote about the toxic legacy of Jack Welch. And when they write about these things, what they talk about is what they consider to be his focus on the short term, his focus on shareholder return as opposed to a broader stakeholder theory of how a business should be run. The truth is he was hardly a short-term manager because for 20 years he was CEO and chairman of GE. And for 20 years, that company performed exceptionally well. That is not a short-term manager, number one. Number two, in terms of running the company for shareholder wealth, yes, shareholder wealth, market capitalization was a scorecard for him, an important scorecard. And it was an important scorecard not only for his investors, but also for his employees, because so many of them had stock options and they were rewarded handsomely for the performance of that company. I do not believe that he was merely a person who was a shareholder return guy. If you look at how he treated his people, you wouldn't come away with that conclusion. How he treated his suppliers or his customers, they were all very important to him.
Were there any?
So,
yeah. Oh, I'm just curious, though, too, since, I'm not sure how much you guys kept in touch. It sounds like, you were in touch with him, after he left the company. Were there any conversations that he had maybe I shouldn't have increased our exposure to the financial sector so much, because that was certainly incredibly problematic after the financial meltdown. I'm just curious if there were any things that he kind of had a rethought about after he left GE, especially because he saw, the things that happened.
Yeah. I think he would consider his greatest single mistake his successor. And look, you can't blame Jack for what happened to the company after he left. you can blame him for everything that happened while he was there for 20 years in the top job. But I think what happened after he left is largely the fault of his successor and many choices that were made by Jeff Immelt at GE.
You can listen to more of that conversation. Just check out our Bloomberg Extra podcast.
A lot of cool Jack Welch stories there. Coming up, two-time IndyCar champion Joseph Newgarden on the business and the joy of racing cars fast.
Plus, we talk Hollywood and streaming with the creator of Showtime's hit series, Kidding.
This is Bloomberg Business Week. Welcome back to Bloomberg Business Week. I'm Jason Kelly.
And I'm Carol Masser. Join Bloomberg Business Week every day on the radio starting at 2 p.m. Wall Street time. You can also catch up on our daily show by listening to our podcast.
And you can find us online at businessweek.com and through our mobile app. And you can check us out on YouTube. Just visit youtube.com and search Bloomberg Global News. Well, streaming and Hollywood, topics we cannot stay away from, talking about it on our show, and consuming all of that content that's out there. We spoke with Dave Holstein. He's the writer and creator of the hit Showtime series Kidding. It stars Jim Carrey and is now in its second season.
He was a writer and executive producer on the Showtime drama I'm Dying Up Here, also on HBO's comedy series The Brink, and a writer-producer on Showtime's Weeds. He's done a lot.
He has, very prolific. Here's our conversation.
We try to be unlike anything else on television, which, as you know, is very hard these days since the landscape has about 500 shows in it. When I wrote Kidding, I really wanted to write a show that would let Jim Carrey be in all of his best movies at the same time. You know, like I was such a fan of The Truman Show and Eternal Sunshine and Man on the Moon, but also The Mask and Liar Liar. And I wanted to play with tone in a way that let me take a character that could experience all of those things, throughout a season of television. And I like to tell Jim I built him a sandbox, where he can play and he can be the best version of himself. And that's, I think, what we did.
So you wrote it for him?
I did. I wrote it with him in mind, which was crazy.
Yeah.
Because at the time, movie stars were not really doing television. I wrote it probably 9 years ago at this point. I was just coming off Weeds, which was a great experience in terms of melding comedy and drama, and I was really hungry for that mixed tone. And I was watching The Truman Show, and I was like, I'm going to write something with Jim in mind. And it took a couple years of being told I know a lot to finally get to a yes, but it's been kind of magical, and then when you involve Michelle Gondry and Frank Langella and Catherine Keener and Judy Greer and all these great A-listers kind of coming together to just be as creative as possible. It's been a really fun journey.
What's it like writing or producing in today's environment?
I feel like it's a great time to take all of your creative energy and put it into a medium that's finally accepting that its own maturity. I think the golden age of television is sort of defined not just by selection, but by risk. And I think that, what's great for writers right now is not just, the abundance of jobs, but the abundance of channels and outlets and audiences. And, Weeds was sort of an early touch point an early experiment in dramedy, which wasn't really a term you'd find on television, and now, you have hour-long comedies and half-hour dramas. And I think it's just a testament to, to the landscape accepting people being as creative as possible and finding their audience.
Well, Carol, from television to music, we turn now to a story in the business section this week.
Right, that asks a provocative question: can music and concert tours save the planet?
Wait, what? Here's Benedict Campbell. He's going to tell us about it. He joined us from Berlin.
If you sort of create a pie chart of what really makes that carbon footprint, the predominant part is actually, as you say, moving the people around, the audience, but also the people sort of making the concert, the bands and all the support crew. And there's just no way to get around that. Now, you can say, okay, let's try and find venues where we can have public transport access. Okay, that's one way. Or let's tour via public transport, via rail and maybe a bus rather than maybe a 747 that you would use to move some kit around previously. But you know, those are only sort of things you can do on the surface. At the end of the day, it's the question, can you still provide the experience that people want? And remember, a lot of these concerts are sort of spectacles. People want something that is larger than life. They want the lighting, they want the sound, they want the big stage. And to be able to provide that, you need that kind of, the backbone, and that creates the carbon footprint. And in some ways, you want concerts to be a little bit of an excess. You know, you
well,
want
especially
to
when you're
be
paying as
at a
much as
special
you are,
experience.
right?
Yeah.
Yeah. You know, and you want the whole, in some ways you want pop stars to be pop stars. You know, you want them to trash a hotel room or, you know, drive a Rolls Royce into a swimming pool and that kind of thing. So, you know, and so in some ways, some people might say, okay, this is great. Other people might say it's kind of patronizing. I want these people to be special and I want to feel special. So the jury is out which way this will fall. There's certainly a lot of young people that applaud this approach, but there might be other people saying it kind of takes the fun out of it.
Right. I mean, I do feel like people of a certain age who are paying those big tickets, maybe I'm looking myself here, like if you're going to see Beyonce, like you want a show. I just want to read great statistics or a series of statistics.
Parts.
The set and production equipment for Beyonce's Formation World Tour filled seven Boeing 747s and more than 70 trucks. According to the BBC, more than 2 million people came to see the show, and they were paying a lot of money to see it.
Right.
To that point. So Queen Bee, she's basically saying, listen, I'm putting on a show for you people, right?
Yeah, and there's no way around that really. And we have one other quote that says, whatever you're trying to do, it's like putting lipstick on a pig. You know, you can abolish plastic straws as much as you want. You can abolish plastic cutlery as much as you want. At the end of the day, it will be a spectacle, and it will be a spectacle the bigger the show is. And that's probably where Coldplay came in and said, okay, we are a huge act, we are a huge band, we will have that footprint, and whether they manage to sort of somehow square that circle, that'll be interesting to see how they do it.
Well, and I do have to ask you, Benny, I mean, we're talking to you, you know, there in Berlin. I mean, it does feel like, as with many things around the green movement and other things, that Europe seems to be a little further ahead. Is that the case here? What was the sense you got from working on this story?
I mean, over here, in some ways, it's easier for some of these bands to enact some of these things. Take transport, for instance. A lot of venues do have very good public transport access, and these are often sporting stadiums that are used for soccer and so on. So a lot of people do come via public transport, and that helps. A lot of venues have banned the use of plastic cups that you would drink your beer from, or little things like in the VIP lounges you would use sort of properly sourced flowers rather than stuff that's flown in from Kenya and so on. So again, you can take the slightly cynical look and think, this is kind of very much on the surface, what's the point?
But it's a start,
I guess
right?
you have to start somewhere.
Still to come, two-time IndyCar champion Joseph Newgarden on the business and the joy of going fast in race cars.
Plus, a food takeover of pursuits, including a guide to opening a restaurant.
This is Bloomberg Business Week. Welcome back to Bloomberg Business Week. I'm Jason Kelly.
And I'm Carol Masser. You can listen to us on the radio on SiriusXM Channel 119 and on AM 1130 in New York, 106.1 in Boston, 99.1 FM in Washington, D.C.
AM 960 in the Bay Area and London on DAB Digital and through the Bloomberg Business app. You can also watch us on YouTube. Just visit youtube.com and search Bloomberg Global News.
And Jason, that's where you'll find interviews such as the one we did with Business Week Pursuit's auto columnist Hannah Elliott and two-time IndyCar champion Joseph Newgarden.
We had a wide-ranging conversation about the business of race car driving, getting behind the wheel even after a big accident, EVs, self-driving cars. Here's just a snippet of that interview.
I think IndyCar is an exciting time for us. We're kind of growing. We've gone through some swings over the last 20, 30 years with just the series, the identity of it, the popularity. And ever since I joined back in 2012, we've just had this nice steady uptick in growth. And I feel like we have a lot more momentum on our side now with Roger Penske acquiring the Indianapolis Motor Speedway and the IndyCar Series. So we feel like the direction of where the series can go and really the growth potential is pretty enormous right now.
We've seen some new changes with IndyCar, especially these new aero screens.
Yeah.
Can you tell us a little bit about them?
Typically, open wheel cars have always been open cockpit as well. So it's an exposed helmet for the driver, and the wheels and tires are exposed. But that exposed helmet, kind of like riding a fast MotoGP bike or something, that's been the last big safety advancement is, well, where can we make the drivers safer? And head protection has been the thing that we've needed to do. So now we're putting a screen on the car, and to your question, it's very similar to Formula One. Formula One just did a halo, so just a structured piece on top of the cockpit. But for the IndyCar, the aero screen is both a structured piece and a windscreen. So it's a fully integrated canopy, which looks like a fighter jet now. It's the biggest safety advancement in motorsports, in my opinion, in the last probably 25 years.
So game changer.
Total game changer. I think the fatalities that we've had in the sport over the last 20 years, this sort of device is really what would have helped in those situations. And we've been trying to create something like this for a while. So it's inevitable. A lot of people were against it because of the style of it, but it's inevitably had to come.
Does it change how you drive? Sorry.
Yeah, definitely. So the weight distribution of the car is
Okay.
totally different. It's a lot heavier. It's about 60 pounds for the device.
Wow.
Moves the weight distribution
That's a lot.
forward. Yeah, it's a lot. The weight distribution moves forward about 1.5%. So because of that, just mechanically, the car drives quite a bit different. Dynamically, it's
Okay, so Joseph, I got to know, you're 29, right?
Yep.
Under 30, you're a young guy. Everyone's saying young people don't care about driving anymore, about driving cars. Is driving going away?
Man, that's the $1 million question, Like, I don't know who's tuning in right now, but everyone wants to know. A lot of people are banking on it. It's a great question. I think to some degree, yes. I think there will be options in the future. What's the runway to get there? I think we're pretty far out still, to be honest with you. I mean, I think at least 5-10 years out before you start getting EVs to be super prevalent. I'll say this. I don't think race car driving is going away. You cannot take out the human element of racing. I mean, I personally...
Well, you could remotely and
Robo
play
race?
around. Yeah.
But do you want to see a robot race?
I don't know.
I don't. It's the same thing with video games.
People go to watch video games and others
Right,
play.
but you have to see a human playing it, right?
Yeah,
you don't watch the computer play each other. So I think there's always a place for human performance within driving and racing. As far as every day on the road, I definitely think there'll be a shift. When's that shift? Everyone wants to know.
And be sure to check out our Bloomberg Business Week podcast for that entire conversation. Well, before we go, we've got to talk about the Pursuit's food takeover.
Here's food editor Kate Crater on opening a restaurant. How do you do it? Well, she asked an expert, restaurateur Stephen Starr, for a roadmap.
Stephen Starr is the hottest restaurateur in the country. Like, he's the hit maker. He's the guy behind so many popular restaurants here on the East Coast, from Le Diplomat, where everybody hangs out in D.C.
Yep.
He reopened Pastis here, which is like the hottest dining room. He did Le Cuckoo a couple years ago, and he also did a Bloomberg favorite, Budokan. Bloomberg crowd favorite. So he knows how to open successful restaurants up and down the spectrum.
Yeah.
He's fantastic. He has 41 restaurants now. And so we asked him, we thought it was a good moment to ask him, like, what do you look for in a restaurant? Like, how do you always go big? Do you sometimes go small spaces? Do you go concept first? Do you line up a chef first? What neighborhoods do you go into? It's fascinating. It's fantastic.
Lighting is really important.
I love that.
I totally agree.
Yeah.
Well, you know what's fantastic? Actually, this was actually one of my big takeaways from this, is that he does not like to go into office buildings, because he was like, all the glass means you can't have ambiance. Like, you want to be able to control the ambiance, and so lighting is key. That's one of his secret sauce things.
All right. So speaking of secret sauce, you just went right
We actually
there.
brought secret sauce.
You brought some sauce because this is just a phenomenal story. This is one of these I'm going to rip out and put on the refrigerator at home. All about chicken wings, which who doesn't love chicken? Like, if you eat meat, you love chicken wings. They're one of the best foods out there.
I can't talk enough about this. So there's this like viral hit show called Hot Ones. I don't know if you've seen it.
Yeah.
I don't know if you guys ever want to employ it, which is why I brought you some hot sauce so you can try it. But this guy, Sean Evans, who's the host, has figured out how to get celebrities to talk by making the meat increasingly spicy sauces. And And he gets everybody,
like A-list celebrities.
You know what? So the person who's actually been the best is Charlize Theron, because she's from South Africa.
Right.
So she's actually the star that flinched the least, I think, when she ate this like crazy hot sauce. But like Paul Rudd, DJ Khaled, Post Malone, everybody, he gets everybody, and it's fantastic.
So
can I read a stat about like how hot this gets? So at a reported 3.18 million Scoville units versus around 10,000 for a jalapeno. So jalapeno 10,000. This hot sauce comes in at 3.18
that sauce
million.
Yeah,
that sauce there.
Yeah, this has 3 times, so it's like the ghost. It's the ghost.
Don't open it. Don't open it.
Yeah, this will clear your sinuses.
Look at it, the flames, man. Well, your whole point is like, and you know how we always say, don't try this at home. You actually say, try this at home, right? You can do these tasting parties.
Well, that's the thing. Yeah, you have. So I've been to some. This guy CB Cebulski, who is editor-in-chief at Marvel, has started having them, and it's such a great idea because I don't know, I do. I'll buy hot sauces on the road sometimes, or I'll see one.
My husband
on the
loves
store.
hot sauces.
So it's so cool, and some of them have like great labels or a funny name, and so you buy them, and then you've collected them. And so the great thing to do is to put an array of them out, buy some wings or make them. We have a recipe for them as well. And then have this party and have people taste them, and it starts a conversation, and it reminds you of a great trip you took to the Caribbean or something.
Right.
It's so great.
Bloomberg Business Week, it's available on newsstands now.
Also online at businessweek.com and on our mobile app.
So what's your must read?
The cover story, Sean Donnan getting a great interview with Larry Kudlow. He's been working on getting this interview for a while, but it came to fruition this week amid the market and economic uncertainty. Was just perfect timing, but it's really some great insight into the president's chief economic advisor, who tends to be an optimist, and you do wonder whether that's what we need right now in terms of what's going on. Your must read.
Well, speaking of timing, Barnes & Noble, is Elliott Management going in at the right time? Can they save this iconic brand? A lot remains to be seen, but they're certainly working hard at it.
All right, check out our Daily Business Week podcast. And of course, you can watch us on YouTube. Just visit youtube.com, search Bloomberg Global News.
More Bloomberg Television starts right now.